What's up, guys? Good morning. Hope you guys are doing good. Happy Tuesday. Let's chat now. There we go. So we'll be going through some analysis this morning, talking through some fundamentals, talking through some technical analysis, and going through my game plan, what I'm watching out for today, which is pretty similar to yesterday. Things have changed a little bit, but not too much. Overall, we're still in the same range that we've been in. Good morning, Sergio. Good morning, Steve. Welcome in, bro. Good morning, Jarius. Hope you guys are doing well. Let me know in the chat if you guys are tuning in, where you're tuning in from. Let me know. So I'll be going through the analysis here on ES, on NQ. Honestly, guys, I'm just going to be straight up with you. I'm kind of tired of talking about it. We've been in the same range now for like 2 weeks. Spain, nice, Sergio. It's beautiful there. Chesapeake, Virginia, very nice. Good morning, Abundance Mogul. Good afternoon on your side. So we'll start diving into some things here, guys. Good morning, Mohammed. Jarius, another inside day. Basically, yeah, so this is ES. I'm just starting out today. If you missed it yesterday, I went through a little bit more higher time frame stuff. I'm going to just go through kind of where we're at on this 4-hour chart in this recent range, because this is what's most applicable. And I'll kind of just talk through my game plan, and then that'll give it some time here this morning so I can answer a little bit more questions. I didn't have as much time yesterday to answer questions. But so going back to, what was this? February 12th, we had this failed break of the highs up here at around 7,000. This area around 7,000 and above into near all-time highs has consistently been rejected and resisted over the last few months, going back to even like October. So continuing to watch this key area of resistance up here at these highs, but we initiated this downside move here 2 weeks ago now. And since then, we've basically just traded entirely within that range, right? From that 1 day, right? Or couple day period here. This is a 4-hour chart, so a few hour period here where we made this nice extended move down, and then since then we basically traded within that. So I'm looking at a volume profile here that I drew on this 4-hour, starting from this downside move here, right? So starting from there through today, right? So I'm looking, this volume profile is looking from there to there, right? And this has essentially formed a large balance range over this time period where we've seen a decline of volume above and below this range, right? The majority of participations from buyers and sellers has been within this 70th percentile. So value area high and low here, call it, right? So the majority of the volume is just balanced within this. So typically when I see basically sideways balance action on the charts, either a single day, intraday, or in this case over a multi-day period, right, for the last couple of weeks, I'm looking at this bell curve volume distribution, and I'm looking for failures at the extremes, essentially, to fade, right? And I generally look for mean reversions targeting the middle. Now, yesterday, I was looking for this up here. If you guys were in here yesterday, I was looking for this exact setup to short here. And honestly, I just kind of fumbled the execution. I took a couple small L's there. I kind of got whipped out in the action before the move. I had the right side, the right direction, the right game plan, and just didn't capitalize on it, unfortunately. So that's kind of been happening a lot this month. I've kind of had a tough month overall, to be honest with you guys. I made a decent amount in the first week of this month, but since then, that price action has been very, very kind of sideways and whippy, and I've either just stayed out or taken numerous break evens. Still up overall this month, but just not ideal. It's just kind of conditions that we're getting through, right? So I'm sitting back and waiting for the extremes to test here today. So let me see here. Basically, especially inside this area, this is the point of control right there. And anywhere here in the middle, I'm really not super interested in initiating trades. Can use this area as a mean reverting target. I'll use this for context if we move out of here, right? But I just don't see anything super high quality as far as initiating positions inside the middle of this multi-week balance range. If we test the extremes, then I'll be more interested either to fade them for a mean reversion or look for a true breakout, right? So that's the first thing that I'm continuing to watch out for today, right? If we fail at the highs or the lows, extreme ends of the range, right, then I'll be more interested in trading the mean reversion, right, until we get a true solid break. And this, I'm going over this on ES, but we pretty much have the same thing going on NQ as well. So I'll touch on that briefly. We do have some fundamentals to talk about. Yeah, abundance, great point. I will talk about that briefly, but let me kind of go through this first. Right, so I just want to start with the technicals here, right? And then we can talk about some of the fundamentals that might change this, right? That might, we kind of need some kind of driver to get price outside of this range, right? And that may come in the form of news or something, right? So we'll wait and see. So if we do get outside of this range, one thing that I'm observing here is how we've kind of consistently made lower lows and some lower highs recently, right? We're seeing a lot of aggressive selling. Now, it surprised me, despite all the aggressive selling, despite all the lower highs, how well bulls have defended to aggressively defend these lows. However, I'm not saying I want to initiate it here, still kind of low quality, low probability. But I'm cautiously observing as we kind of within this balance range possibly make some lower highs and continue to kind of peak under some lower lows with some heavier sell volume. That's kind of setting up for a scenario where if we do break down, that could turn heavier. Ideally, I would want to see a strong break under this value area, really under 68.20 to 40 range, confirmed by weak pops failing to recapture inside that, right? So if and when we see that, then I'll be more interested in shorts on failed rallies that fail to get back inside this range and target likely a breakdown of 6,800. We do have, honestly, not like looking at the higher time frame charts, I really don't have too much levels below this besides kind of prior day lows around 67.50s. So that would be like the next nearest thing that I have my eyes on, which is from this low here, right? So we have that lows down at 67.50s. And then below that, we have kind of an area that's consolidated and rallied out of multiple times, kind of a large area between those 67.50s and really all the way down to like 6600s. So depending on how weak that gets, if I'm saying if the market continues to turn weak and we break down under this structure, the next super key thing that I have, right, without looking at like moving averages or anything like that, is this area around probably 6,600, right? So it could trend lower down towards there. Now there's a lot of ifs there, and I don't want to jump in front of that thinking that will happen before the market really shows me that is kind of happening, right? So actually, let me put this back on here so I can share this screenshot here. Right, so we're kind of seeing that pressure build if we do break under there, and if we see kind of failed pops fail to recapture back inside there, then I may look for that short targeting the breakdown of 6,800. Drop this in here. Now, in the meantime, we're still seeing buyers defend this pretty aggressively, still defending it here in the pre-market this morning, right? Get rid of that. So if we continue to kind of fail, I don't really like it so much here. We didn't quite break the extremes, but we did kind of dip down to these lows here around 68.50s. And so far, we're starting to wick up and recapture back towards the middle of this range. Right, so still observing that, nothing super key. We just kind of came and tested those lows again here this morning in the pre-market, and we're kind of bouncing up back towards the middle again. Now to the upside, this was kind of a key area here where I have this box highlighted. You can see how we resisted. This was a particularly low volume area from the sell-off this day that I had marked, and then since I marked that at that low volume node, we've rejected there 1, 2, 3, 4 times. Remember, this is a four-hour chart. So 4 times we've kind of tested that and rejected off of it. That remains a key level to the upside at the top end extreme of this balance range. If buyers do break and hold above there, then we could see continuation kind of back up into this 69.70s to 7,000 area, right? This was that last area where we kind of consolidated before we broke down, right? So we could go retest that area again. And that aligns with kind of this higher time frame balance range that we've been in for a couple months. So pretty similar to yesterday. Yesterday, we tested both ends of the extreme. So yesterday, we tested these highs. We rejected them at the extreme. It came all the way down to the bottom, tested them, bounced. But so far, we have not really recaptured back over even the middle of this range. We're kind of holding under the point of control of this range, right? Which is kind of setting up this lower highs. That's what I'm kind of cautiously watching as this potential weakness increases, potentially. All right. Let's take a look now at NQ briefly. Mostly the same stuff, to be honest with you guys. NQ has been a little bit relatively weaker overall in recent months, just due to some sectors like AI software that have been particularly hit heavy by AI fears of disruption and stuff. You can see more clearly here these lower highs, right? Let me do this in red, right? Actually, first. So similar to ES, we have this balance range that we've been in roughly between 25,000 and 650-ish, right? That's where the bulk of the volume has been transacted. That's where we keep mean reverting around 24,800. So again, similar to ES, until proven otherwise, I'm still watching for failures at the extremes to target mean reversions. That is getting a little exhaustive now that we've tested these extremes, many times. I'm kind of getting more and more just kind of waiting for a true breakout, right? Either a break above these extremes, above 25,000 that holds pullbacks, buyers defend above, targeting probably a retest back into 25.3 to 25, 450s, right? Or as I mentioned, we're kind of setting up weakness here. We've been making some lower lows. Sellers are repeatedly heavy as we come into these lows. Now, we did recover back over this point of control on NQ, which we did not on ES yet. So that's a little interesting. But again, I don't want to overanalyze stuff too much here inside this range. Here inside, especially within the heart of this value area here, which we're consolidating in this morning here in the pre-market. There's not a ton of edge on my end, right? You may be able to scalp points, reading the order flow, you can scalp points, no doubt. But we're kind of narrowing in this range. It can be very wicky, very choppy. It's very easy to just rack up a lot of stop losses as we are very directionless, very sideways in this range, unless, we kind of get clean setups at the extremes on failed breaks. Good morning, Clayton. Good morning, TradeX Jitsu. Welcome in, guys. Right, so that is the technicals that I'm watching here. And then obviously the other extreme here, if we break down and we see pops fail below this range, right, I'd be looking to target a breakdown of these lows and those prior lows. Right. So take a look at market AI here, talk about fundamentals. I have this portfolio set up to monitor some kind of leading things up in the market, ES and Q, SPY, QQQ. And then I've been paying attention to IGV and Microsoft, which have been kind of the leaders of the downside, the leaders of the losers this year so far. So I've been kind of paying attention to them to see if they continue to lead lower or if they find a bottom. Previously, IGV had kind of found a bottom around 79.80, but has held that for a week or two, and then has now broken it down, right? So watching out for that. But again, just kind of a quick overview. Portfolio of major U.S. equity indices, ETFs, and tech stocks exhibit neutral to bearish sentiment across hourly and daily biases, reflecting cautious market positioning amid trade policy uncertainties. Assets show correlated downside pressure with broad indices like ES and SPY aligning with tech-heavy QQQ. Individual names like Microsoft and IGV indicating limited divergence. Primary drivers include looming U.S. import tariff, stock inflation fears, upcoming employment data, fostering a risk-off tone that weighs on the collective performance. All of that to say, fundamentals are kind of a little bit heavy. Everything's kind of leaning a little heavy here. Again, anything can happen. I'm not saying anything here is 100%. However, things are leaning kind of heavy, right? It's been pretty much sideways up here towards these all-time highs for a couple months. There's heaviness in terms of geopolitical tensions with the US and Iran. There's heaviness in terms of kind of fear, uncertainty, and doubt around AI disruption of different sectors. They're calling it the AI Grim Reaper going around, like which sector is going to get tanked all of a sudden next out of like kind of these panic fears about AI disruption, right? So from that perspective, there's also a lot of fear, uncertainty, and doubt kind of around tariffs going on right now. Tariffs have been on again, off again, on again, off again. Supreme Court struck them down. Trump issued new 15% tariffs. So there's just a lot of uncertainty from multiple different facets right now, right? Tariffs, Iran, AI. There's a lot of heaviness in the air, we could say, right? So those are any headlines that come out around those things are going to potentially have an impact on the market, right? So if and when we do break out of this range, right, because we're not going to stay in this range, we do need to kind of be observant of what the underlying fundamentals are. If we break out and there's just kind of no cause, there's just kind of a fake out and mean reversion, different than one of these fundamental underlying things causing heaviness in the market either exacerbates the problem or is kind of alleviated in the market, kind of goes back towards all-time highs again, right? And then as far as high impact events upcoming, checking out the economic calendar. Today we have consumer confidence at 10 a.m. So that's going to be important to watch out for. That can spark volatility. Watch out if you're in positions. I typically am not in positions in the minutes before or after higher impact news like that. And then tomorrow, what is it? Not too much, some note auctions tomorrow. Thursday and Friday, heavier hitters with jobless claims and PPI on Friday, right? And PPI and PMI, Chicago PMI. So some heavier hitting news events later in the week here. Today, consumer confidence at 10 a.m. So let's be aware of that. That could have an impact and change direction of things. S&B Financial, welcome in, man. Loving these pre-market breakdowns, brother. So awesome. Glad you're here, man. Glad you find value in it. I try to bring kind of a balance of fundamentals, technicals, and then how I'm looking to apply that in the different trade scenarios, right? So let me narrow down a little bit here as far as the technicals of the game plan today. So this kind of, anything can happen, right? I'm not saying this is 100%, but this kind of lends to what I'm talking about as far as the weakness kind of building here. We've had this range that I talked about, that we've been rejecting at these highs. We've been, supporting above these lows, right? But yesterday we had a failed break of the balance range highs again, right? And you can see how that was done overall on relatively lower volume. And we built a considerable amount of volume at the lows of this range yesterday and never really sustained any kind of pop or recovery, not even past kind of the 50 percentile of the day or that point of control, which is around 6880s of this kind of multi-week balance range, right? So we kind of came into the low. We failed to break the highs of this range yesterday, came all the way to the lows and kind of consolidated there with a lot of volume. So this is kind of telling me in the near term, at least, right? Again, things can change, but in the near term, price is being accepted more at these lows now, right? So buyers, in my opinion, are starting to look a little exhausted and a little bit running out of gas here. And you can see how we're kind of making these lower highs overnight, right? We may, have a little drop and find a significant amount of support, right? Because these lows have been repeatedly supported, right? And we may shoot straight back up to the middle, right? 100% possible. However, this would be added confluence and context if this heaviness does increase and we do break down from here. That would be kind of added confluence, how we've kind of seen the auction move down here, kind of sustain a lot of volume here. Bounces fail to get back up over the middle, lower highs. There's just more and more weakness kind of building, right? But the question is, that weakness building, does it turn into a big bear trap and mean reversion yet again in this range? Or does it turn into a thing where, buyers are just completely kind of exhausted now and we're going to seek lower prices? That's what I'm cautiously watching today. All right, let me check out. Thank you, sir, about tariffs. You just clarified my mind on it. Thanks. Yeah, of course, abundance. Appreciate you being a part of the stream here. So does anybody have any questions on the analysis, trading questions in general? Let me know in the chat. I've got a couple minutes here. Can go over a couple questions if anybody has it. Do I have Mohammed asked, do I have a video on how to read the DOM? I don't have a video. I don't have too many videos on YouTube yet. I've mainly done a lot of live streams. I do have a lot more like training in the flipping futures coaching community that I run every day, live training. However, specifically looking at the DOM, are you talking about this DOM Pro on Bookmap? If you're talking about the DOM Pro here, the biggest things that I pay attention to is outliers of volume profile delta, especially if it aligns with a key level or context or setup that I'm reading. So I pay attention to that. I also, just kind of roughly pay attention to the bid and the ask and like how thick or thin they are. But the big thing is volume profile delta. I don't look at this as much because this is kind of the same information that I see broken down on my footprint charts. So I look more at my footprint charts and see this on a specific 5-point range of the delta by price and kind of the volume tails, if you will. So I kind of look at this same information on my footprint chart on a 5-point range. The other thing that I'd look for is just areas of where the volume is kind of built. Like you can see here, this kind of bulge in volume here between buyers and sellers around these 50s. And kind of how it tails at the end. So I'm looking for, like, say intraday, we see an area where price kind of like rallied quickly through and left kind of like a lower volume area you can see here, right? That may be a key area of interest to me, or vice versa, where there's a lot of volume built. So that's a way I can visualize it differently than like a whole day volume profile per se. And this data clears for me at the 9:30 bell. So like my chart volume profiles are kind of the volume profile in the full day session, whereas this clears at 9:30. So this is just showing me kind of the profiles and data of the regular trading hour session. Emmanuel said, "Hi, I'm new to your channel because someone recommended it. Can you share a bit about you, how long you've been trading, and what you're trading from?" I primarily trade the index futures and options. I trade primarily ES. I'm primarily an S&P trader, but I do trade the NASDAQ as well. So I trade intraday futures and options on ES and NQ, SPY and QQQ. I do analysis based on supply and demand from technical analysis, volume profiles, etc. And I read the order flow real time via tools like footprint charts, bookmap, etc. Really to define risk and gain insights for very precise entries on my trades. I trade personal accounts, Emmanuel. Okay, last question I can get to here before I got to drop. Jerry has asked, how did you get to the point where you spotted consolidation as it's forming? So this is a good question. To me, I look at things, periods of consolidation, like you said, as an equation, right, of effort and reward, right? So effort kind of times reward. Okay. And this is an age-old concept of market auction theory, right? So if I see significant effort, say price rallies to a high, and this is maybe a supplier demand zone, a key level, and I see significant aggressive buying, especially over a period of time as the market consolidates, and maybe say dwindling volume at the lows, right? But if I see significant effort, right, over a period of time where price is consolidating at a key area that does not get rewarded with price moving higher, that tells me that's a key area, one, of absorption, right? So you could also more specifically call it distribution, where big players are passively selling, right? Now the market may pause here, those sellers may run out and then we may rally through it. But usually, most likely, if this sustains, the next move, especially if some aggressive selling comes in, is likely to break down and reverse till the next area where, call it a demand zone. And we see significant, effort over a period of time, again, effort and no reward, right? And then maybe some buying comes in with not even so much substantial effort, but is very rewarded quickly, right? So if I see significant effort from sellers at a demand zone with no reward, and then aggressive buying comes in with not even substantially more volume, but it quickly and speedily raises price, so plus reward and medium effort, that's telling me the market is likely to reverse higher from there. So I look at these areas of consolidation in real time combined with order flow, volume analysis, etc., basically to read what's happening in the auction in terms of effort and reward, right? And that tells me where, big players are involved, absorbing and distributing at prices, right? Passively selling, or passively buying. Because you got to think, if a big players in the market need to sell and they want to sell at this price, right? If they just dump all their size here, they're going to spook the market and drop it, and they're not going to get filled all their positions at this price. So over a period of time, they will distribute and passively sell as much as they can to get their best average cost. Say they have a multi-billion-dollar position to unload at this zone here as price consolidates. So we see a ton of aggressive buying, but price not moving up. Well, that's because there's a big seller up here that's got $1 billion worth of shares they need to unload, or futures contracts or whatever, or maybe they're hedging, maybe, I don't know. Maybe they're a speculator or hedger. I don't know. But all I know is some big players are trying to unload a big position here, right? And so that is an area where I see consolidation with a lot of effort and not a lot of reward to buyers based on looking at the delta of volume, et cetera. And then when I see a reversal start to form from there with selling that is rewarded, then I know, that's a high probability spot for a reversal to occur. Does that make sense, Jarius? So when I'm looking at consolidation in real time, I'm looking at the equation of effort and reward from buyers and sellers. And if there is significant absorption, especially over a period of time, in real time, as I'm seeing that kind of consolidation occur, right? So a lot of effort without reward, then that's telling me big players are absorbing or distributing there, and likely we're going to see a reversal from there. Good question. All right, guys, I got to drop. Thanks for tuning in. We'll be back tomorrow for the pre-market analysis session. For those of you that are in flipping futures, we'll be over in there for the live trading session. If you guys are interested, if you're not in there, the link is in the description of this video. If not, thanks for tuning in. Appreciate you guys joining in for the live streams. Hope you guys are getting value out of this. I'll continue to do them as long as I get good participation from everyone and people are getting value of it, then it's worth my time to kind of share that with you all. So I will see you guys over that are in flipping futures over there for the live training session. Peace. Thanks, guys.